So look, I think the view towards China, I think, has to be measured by reality. The reality is, if I look at the structure of GDP growth in China last year, 80% of that was consumption expenditure. So we're not really seeing that corporate capex impulse flowing through into the market yet. We're seeing very, very significant credit issues, as we just discussed in the previous segment. And so there are going to be bumps on the road. What we would highlight from a JPMorgan perspective is that the right analogy for China going forward is really Japan for the last 2 decades. And you've seen 10 tradable rallies in Japan of 70% or more upside, 10 tradable declines in Japan of 40% or more downside. And so focusing on trading the China environment is something that we are very focused on. For 2024, we're looking at GDP growth of 4.9%. That doesn't sound particularly impressive. However, Street's only at 4.5. So we do see broad-based overall macroeconomic growth supporting the broader consumption story moving forward, and we are selectively exposed to China.
Selectively as in how? Where are you going?
So, look, from a sector perspective, we are still cautious on the financial sector because of the credit concerns that we just discussed. We are still positive on consumption expenditure moving into next year. We actually do like specific segments such as media and entertainment as plays on that. But again, it's very, very sector and company specific.
Just really quick, because I've got to ask, based on the point that you just raised, is there any kind of even outside possibility that this could be one of the years that we see the 70% upside? Because you're the one that mentioned the numbers. I've just got to put the question out there.
So look, it's interesting because you're entering the conversation, and as we've discussed on previous programs, ultimately markets are a game of expectations versus reality. The reality of the China equity market right now is that it's been the worst performing market since 2020. It's also seen the worst EPS revision since 2020. So there's a rational basis for that. As we enter into 2024, we do see upside from a broader macroeconomic perspective. We are starting to see selective upside on a sector basis. Valuations are very low, and positioning is extremely low, with China the largest underweight for global investors in global emerging markets today.
So correct me if I'm wrong, 18% upside is what you're seeing this year?
Correct, from an index perspective.
Yeah, from an index perspective, okay.